Hi, this is Jack from Alpha Charts with the State of the Market video. Today is December 5th, 2020. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoy these videos, please like and subscribe to my YouTube channel, and I am on Twitter at AlphaCharts365. All right. Fighting a little cold right now, so please don't mind the shaky voice. But let's go through these markets. Starting with the SPX, we went ahead and broke out of this range, which we were watching, and we moved higher to all-time highs. Nothing bearish about that. I think that is that's great. There's nothing wrong with that move. Let's look at the Qs. The Qs, again, just like the SPX, was fighting this upper range here. It broke out and it was able to close at all-time highs. Again, very bullish, all-time highs. Russell 2000 leading the pack. Again, it's kind of weird saying that because for so long it hasn't been, but the Russell is leading higher, has made all-time highs once again, and looks great. Now looking under the surface a little bit at these different indexes, looking at the equal weight S&P, as you can see, compared to the SPX, it is a much stronger, it looks much stronger. It broke out way before. And so that just tells you how it is a broad-based rally, not just, a few mega caps that are moving. And actually, we're going to look at those in a second and show you how they're not moving. QQQ, same thing. You see it did break out. But when you look at the equal weight QQQ, you see how it broke out way advanced and has been moving steadily higher. Again, it just shows you how it is a broad-based rally. Looking real fast at a few of the mega caps. If you notice, Apple still has not broken out. It's contending with this area right here. I think eventually it will, but that remains to be seen. Amazon, same thing. It's got this little consolidation here, within the consolidation, right? So you have like kind of, something like this, and maybe something like this. So it's gonna have to make a move soon. It may be the big move. It may be the catalyst to the big move. We'll see. But Amazon, Apple, two examples of how the mega caps are not really participating yet. Hopefully they will soon, though. We'll see. Looking at the ETFs, sectors that matter. I like XLF here, and you can see they continued higher. Maybe coming into this $30 area, which may be some resistance. We'll see. You can see that the big boys, though, looking at the financial services group, has already broken out. Again, why is this area important? Let's go back. Let's go to monthly chart just to make things easy. You see this was the 07 highs right here. And in 2018, we retested it. A fake breakout here. And now we're back above it again. So this area right here is extremely important against the financial services, your JP Morgans, Bank of America's, Goldman Sachs, American Express. All those guys are in this one. And so I think if financial services continue higher, I think financials, will go along with them. And I think the market is going to be in good hands in a nice uptrend as long as we have financials participating. Looking at the semiconductors, closing all-time highs, big green bar here on Friday, but yeah, everything is looking good. Maybe getting a little extended, but that's in a strong uptrend, right? So whatever little pullback we have here is within the context of an uptrend. Just looking here, yeah, about 14.5% from the 65. And from the 23, it's about 8. Perfect. So that's good. Let me get rid of the 50-day. All right. Yeah, so that's SMH looking pretty good. Let's look at the lumber. Lumber, again, continues with its uptrend. It's a bullish characteristic, looking great. Moving on to let's look at some credit. Change this and get rid of that. As you can see, that credit continues to fall, or tighten, we'll call it. The spreads continue to tighten, and that is a positive for stocks, so we like that. And next up is going to be the VIX. VIX at 20.8 and falling. So I think that is in a trending market. Again, it's what we want to see. Next up, let's look at the percent over the 50-day moving average. So it's in this red area, which I've identified as maybe getting frothy or a little overheated. As you can see, things maybe are a little bit extended. Doesn't mean they're going to crash tomorrow or even correct tomorrow, but and it could still move higher, obviously. But as we do move higher, that 90+%, I think that the chance of a pullback increases. So we'll see what happens. Again, I'm not going to preemptively do anything with my portfolio just because we're getting frothy. There has to be some signs of problems in the market. If not, it's just it could be just a quick shakeout for the next move higher, right? Like these are just quick shakeouts and moves higher. All right, let's look at the put call ratio, equity only. As you can see, also showing froth in the market. Again, not to the point of crazy extreme froth, but it is getting frothy. So with that being said, I think being cautious with your new buys and making sure that you have really good entries on them, not extended. I think that's going to be the most important thing that you could do is to make sure you have really good entries. So if it does go against you, you get a paper cut and nothing more. And or if the market keeps going up, you just have a great entry and you move forward, right? Let's just look at value line geometric index, and that'll be the last thing. And as you can see, it's a broad-based rally. I mean, at 562 now and rising pretty straight up right here. So people are buying hand over fist. And I think that is definitely a positive. So value line geometric index is looking good. Breadth is looking good. Things are hitting all-time highs. The VIX is low. Credit spreads are good. So yeah, it may be a little bit of froth in the market. But with that being said, I would expect that the dips would be buyable. What would change my mind? If we fall back below, we'll call it 300-ish on the Qs, that's a different story. Then this would be considered a false breakout, and we're in a different scenario at this point. But we are early in December, and chances are we're going to continue to rally at least a little bit longer, and just be real careful. If this kind of falls back below 300, that would be my sign that things have changed in the market. All right. Well, again, hope you guys have a good week. Stay safe out there and take care.